Hey everyone, I just want to go over one of the things that we talk about so often with SELFi.com is what is the difference between retail interest rates and wholesale interest rates. So just to back up, SELFi is an online digital broker, so the lenders that are providing the interest rates to us, they're providing their wholesale interest rates. So you can't get the same interest rate that the lenders are providing to SELFi that you can get directly from the lender. So here's kind of the way it works. And so lenders have two what they call channels. One is a retail channel, another is a wholesale channel. And basically these are origination channels for them to acquire customers, for them to do loans, and whether it be that they service the loans themselves after the loan is completed and the customer makes the payment to them, or maybe they even package the loan and sell the servicing. But basically they look at these two channels as origination channels. And the way it really started is, retail is the easiest to understand. Basically, you work directly with the bank, you work directly with the lender reviews your application, they approve your application. So that lender is going to create a whole operational center to be able to fulfill the loan volume that's coming in. So they got sales and they got operations. So their sales staff is in charge of communicating with the consumer, making sure that the borrower is providing all the documents that they want to move forward. And the operational staff is like the underwriter and the closer, and making sure that the loan package itself aligns with the investor, whether it be Fannie Mae or Freddie Mac. Make sure that the loan is good to go, that they can fund the loan. So you kind of have these two departments in your retail channel. And so from a retail lender, you got this operation set up where you're just going through loans that are submitted directly from their sales channel. But they say, well, what if we opened up the possibilities for loans to come into our operation? So we've got 100 underwriters on staff. We can do a lot more volume with the amount of operational employees that we have. How do we get more volume? And so what they do is they create what's called a wholesale channel. And basically what a wholesale channel is they're working with third-party companies. So these companies don't work directly for the bank or lender. They are their own independent companies. And the wholesale lender will then provide basically the fulfillment for the operation. So the third-party company like SELFi will assist the borrower in applying for the mortgage, but they're not going to be the ones doing the underwriting and the closing and wiring the money themselves. So it creates kind of this broker dynamic. And most people think, wow, working with a broker, that's going to be really expensive. That's probably a misconception that many people have. But these wholesale lenders, which are often also have a retail channel of their own, they know that they got to give these brokers much lower interest rates than what they can charge directly to the consumer. And that's for really two reasons. One is when you work directly with the lender, you have their retail interest rates, and therefore they are the one acquiring the customer. So all the factors that go into the cost of what you need to make per the loan, this is how basically the lender is thinking. They're thinking of customer acquisition costs. They're thinking of, this is marketing, they're thinking of sales. And within sales you have the loan officer, called the LO. You have the team lead, because they put these LOs on team. Then you have the division manager. And then you have, on and on and on. You could then, all the way down to, the CEO or the owner needs to get their cut. So you create these sales costs. The operational costs kind of are the same, retail and wholesale, but when you have a retail loan, you have all these costs, the customer acquisition costs and sales. So when they get a loan via wholesale, well, then they said, we've just eliminated these things, because now it's the broker like SELFi that's actually acquiring the customer. They're doing the sales, and they can structure their company the way that they see fit. And so the way this kind of plays out as far as interest rates is for most brokers, it ends up being kind of the exact same. So we kind of went over pricing in a different video, and if you haven't seen that video, I encourage you to watch that before you complete this one, because I'm going to talk to you like you've already seen that video. So each lender is going to have their own rate sheet. They're going to have their retail rate sheet, they're going to have their wholesale rate sheet. And so this is very common. Let's take an interest rate of 3%, just kind of generic rate. Now on their retail side, they're going to basically say that 3% is no points, 0.00. That's the pricing. So it's like you're getting that interest rate without paying points, but then you have the title, the recording, any sort of underwriting fee. So you have the fees that add up depending on which state you're in. Let's just call it $3,000. So your closing costs of $3,000, you didn't pay any points, you worked directly with the lender. Now this same lender will also have a wholesale interest rate. And that lender now they can set these prices, and they do this on a daily basis, but they probably are giving the wholesale rate about a 2.25% better pricing. So 2.25% better pricing. And the national average for a mortgage broker compensation is 2.25%. So this is the wholesale rate, not including any broker compensation. So let's say you work with, Good Broker, and they charge paid by the lender, so their lender paid comp, lender paid compensation is 2.25. That's the national average. So when you factor in that the lender is giving the broker a better interest rate than their retail by 2.25, and then the broker charges 2.25 themselves, paid for by the lender, the net result is 0.00 pricing for the borrower. So it ends up being kind of the exact same deal, whether you work directly with the lender or whether you work with the broker. And this is when the lenders have both retail and wholesale channels. And same thing, you'd have this is a 0.0 points. And personally, now, even though this is the exact same deal, exact same closing costs, my personal preference, though I'm sure there's many people who would disagree with me, my personal preference would still be to actually work with the broker, because when you work with a broker, you're working with someone who's much more experienced and could probably identify any issues with your application sooner than a retail lender where you're typically working with someone who's far less experienced. And then on to SELFi. So we kind of take this and this is the standard kind of operating for a lot of the lenders that we both partner with and some of the lenders that we don't partner with. And so our whole thing is that we believe that banks and brokers, they charge too much on mortgage refinances. So SELFi lender paid compensation is 1/3 of the national average. So instead of 2.25, our lender paid compensation is 0.75. So you can see the difference here. So if this same wholesale lender is giving us a lender credit of 2.25, but we just choose to earn less, then that means the end result pricing for the consumer is going to be 1.500 back. Okay? So let's say if this loan was a $200,000 200K loan, so you work directly with the lender retail, you have 0.00, you have, let's call it $3,000 in closing costs. You work with Good Broker down the street, they have their lender paid compensation of 2.25, ends up being the exact deal, and you have the closing cost of $3,000. Or if you go through SELFi, because our lender paid compensation is less, you're going to get a pricing of 1.5%. 1.5% of $200,000 is a lender credit of $3,000. So you get this back in the form of a lender credit. And if the closing costs, like the title and the recording and the underwriting fee, add up to $3,000, then your net result is a zero closing cost loan. So that's really how we enable consumers to save more money. But it's also for you to just understand, why we work with lending partners and what, the biggest misconception we get is, oh, wouldn't I just get a better deal working directly with the lender? And it's not really the case. It's really you're often going to get a better deal going through their wholesale channel. And so I just wanted to really break it down to the math. This is how lenders are thinking about their operation. So now you're aware and you can be more informed when you do your own comparison shopping.